believe you feel that we got some things out of context about what you were saying to the Redditors?
Yeah, I wasn't telling people to buy more at all. In fact, I said, look, any of us who have traded long enough have been through the pain of making mistakes, and the key is to learn your lessons. And if you're going to hold the stock, if you can afford to hold it, I'm not a fan of selling into a diving market. And so I told them if you can afford it, to hold on. But I certainly am not encouraging anybody. But, that said, I am a fan of what's going on with WSB, and I like the idea of this collective buying, and I think it could really have an impact on the markets in the future.
GameStop is halted, we want to mention. Mark, here's my concern about some of what I see happening out there, including on Wall Street Bets, is there are people saying, hey, hold the stock. Here's why you should hold the stock. No matter what happens, it's going to go higher. It's not clear who these people are, their real identities, what their track record is, what stake they have in this, whether they're really holding or if they're dumping it. I mean, I'm all for the retail investor in this situation. And so often, Mark, you know this, we see these cycles where the market gets really high valued, retail investors get in, they're trading, maybe even day trading, things go down, then they get disillusioned, they go away. I don't think that's good for retail, and I don't think it's good for the market either.
Yeah, I look at it differently. I think 25 years ago you would have been absolutely right because it was more difficult to acquire information. Now the information is so readily available, and obviously it's supposed to all be public information that we all have access to, and no one's supposed to have an information advantage. And so I think, groups like Wall Street Bets, aggregate that information in some cases, and you can be a smart investor and still be a small retail investor and still, become part of this unwired network that buys together. I get your point that we don't know who's making these recommendations, but you're not looking at one individual or 5 individuals acting as an analyst and trying to give themselves some authority. You're talking about, millions of, not millions, let's just say tens of thousands of people who are posting. And the information on Wall Street Bets is just one source of information. But it's just, kids today, younger generation, look at things differently. And I think what's really altered my perspective on it is what's happened in the crypto market. Hodling, hold on for dear life, has worked for a period. Maybe Bitcoin, Ethereum, et cetera, will go down again. But at the same time, we're starting to see the evolution of applications on blockchain that are really starting to build marketplaces. And I think younger kids, Gen Z in particular, maybe younger millennials, have a different approach to, how they look at stores of value, how they look at how assets are priced than we looked at traditionally. And let me just add, look, the narratives that we create to sell stocks, price earnings, right, discounted cash flow, those are all subjective. We just have been told by Wall Street that if the lower the price earnings ratio against your growth rate, then that's an indicator that the stock's going to do great things. Or Graham and Dodd in terms of asset valuation. And, that doesn't necessarily hold in a digital environment in the same way it did in the past.
So that's really interesting, Mark. By the way, we had a halt on GameStop, limit up, and it's just now resumed, as you can see. So are you saying that the millennial generation and the way in which technology is caught up to trading is going to make Graham Dodd obsolete? I mean, those metrics have lasted for generations for reasons, Mark.
Yeah, they used to trade salt for gold, too. Things change. I'm not necessarily going against Warren Buffett and Graham and Dodd, right? Because, what Warren Buffett can do is actually come in and buy a company, take it private if it was public, and monetize it in a different way. But how people value assets is changing in a low interest rate environment. And, we're looking at stocks because we've seen what's happening in GameStop, and that's, we have that second by second pricing. But look what's happened in other alternative assets. Trading cards or digital trading cards or artwork, and we celebrate when somebody that we presume is smart comes in and pays some incredulous amount for a piece of art. We celebrate when, that Michael Jordan rookie card has gone up, 700% in a year or less. And we don't just presume that the people who are buying trading cards are just, dumb investors who don't know what they're doing. In a zero interest rate environment where access to buying assets, trades are going to happen.
Yeah, that was my next question. If it hadn't been for money supply going to the moon and everybody being stuck at home, I mean, those trends are theoretically reversible. Are you saying that the consequences of them in the short term are also reversible or not?
No, I think this is real. I think crypto, Bitcoin and Ethereum are teaching us some really interesting lessons. I posted a poll on Twitter, and I asked, how do you consume your information about stocks and comparable assets, video or by reading? And then I asked, how old are you? Are you 25 and under or 25 and older? And the result was 36% of people consumed their first information via video, and 35% of the people who answered the poll were 25 and under. I see that with my kids. They don't go online to read SEC reports. They watch videos, and that's how they get information. And the point is that, different generations consume information differently, and they also value things differently. Generations now, particularly Gen Z, that has grown up with an iPhone their entire lives, they put a premium on items that are digital. So the idea that a digital trading card or digital artwork could have more value than something tangible in our minds or physical would be inconceivable to many people, yet to Gen Z, that's what makes perfect sense. And so when it comes to stocks, it's the same thing. I don't think they look at them, and I personally never have either. I mean, I've never looked at owning a share of stock that doesn't pay a dividend as the current value, the discounted value of future cash flows. To me, that was always a narrative that brokers used to sell stocks. To me, a share of stock without a dividend is just like a baseball card. It's what someone will pay for it. And I've written blog posts for 15-plus years saying, I always was taught you get long and you get loud, and, you get out there and you create more buyers for your stock and the stock price goes up. And that's exactly what's happening here, except it's just Wall Street bets that's doing the getting loud. And I think now that they've recognized their power and now that they've learned some lessons, we're going to get more of it, not less of it. It's not going to be a set of circumstances where all these people lost money and they're going to go home with their tail between their legs and they're never going to do this again. They've seen it in crypto. They know what hodling means, and I think their perspective is different.